Hello, good evening. Welcome everybody on today's presentation, today's webinar. And I guess you have read the headlines of our webinar. And today we're going to talk a little bit about aging, the aging population, and what to do, of course, about our retirement. So this is a little bit of the theme for today. My name is Claudia Eifert, and I very much welcome everybody on today's presentation. And I know it's Saturday, you guys are busy, it's weekend, everybody's enjoying, but hey, still we have some great information here to share, and I'm 100% sure that you will go out after this presentation with new information, which you may didn't know, and certainly with information I hope that you're gonna take some action on, because at the end of the day, we all gonna age, so that's a fact. I mean, we can't stop that, even though medical science today keeps us living longer, but we all will face the problem, of course, on financing our retirement. So as this image very well shows here, people mistakenly go through life thinking they will actually need less money when they retire than they need today. Now ask yourself the question, would you like to live a worse lifestyle because you're going to get less with your pension than you actually got paid when you were in your peak income years? Or do you think you actually need more money because obviously with age, also, we have to pay for different health issues, etc., etc. And I don't think that anybody or most people don't necessarily want to go camping, or they prefer to when they travel or go on holidays to go on a more comfortable holiday. So certainly the question, I believe, to think that we be able to live on less money is certainly not true. We actually will have to have more money. We will actually need more money when we do retire. Now, the traditional 40 years career, as we know, that doesn't exist either anymore, because we understand that artificial intelligence, etc., jobs being replaced. So you don't necessarily anymore have a guaranteed income for, let's say, staying at the same company and of course working all these years, yet you will find yourself, you're going to change jobs all the times, being in different places. And as you see here, of course, on the age of 40 years in this chart, well, most people, and this is a statistic, obviously, most people actually, it's when their income does peak, when they earn the most. Yet, of course, what also is a statistic and a fact, that when we are age around 65, our income drops actually 50%, with women even further, even up to 70% in women. And so the ruling paradigm really is to work for 40 years to retire on 1/3 of what wasn't even enough during those 40 years. How can this actually be possible? So when you look at and really start looking down, when was actually the last time you sat down and figured out the following? How long will you live, right? And we know we are living longer, way longer now. What income would you need to live your desired life? What would that be? How often do you want to go on holiday, right? When do you want to retire? So what age do you want to retire? How many years does this actually give you to finance the retirement? In retirement, do you want to make less than you do now? So those are some questions which are pretty much very important, yet so many people actually take them so lightly. And certainly when I was growing up, the commonly held belief was that lifespans extend to age at 70, and if, of course, by reason of strength, possibly to 80 years. So it was, just normal that you would get your pension with 60 years. That's when you would go into retirement. 62 for men. Now it's, of course, longer at 65, and you would live to in your 70s, and some into your 80s. But according, of course, to Time magazine, these times or in these days, we seem to have added another score. Many people are living well into their 80s and 90s. But yet, of course, our pension system worldwide, globally, wasn't designed for that. So everywhere in the world, that system is basically falling in one hand side apart. So when we look at some of the developed countries like, of course, Japan, I mean, Japan has embraced the idea of 100-year life. So they embraced this idea of 100-year life. But what really does happen when we all live to 100 years? And of course, with all the science and all these new things coming out, of course, my intention is to live longer. Obviously, we want to all live longer, right? If we can, if medicine allows it, if our body allows it, we want to live longer. And that is, of course, the fact. But of course, the bad news there is that spending the same or even more time, okay? Imagine you're living 80, 90, 100 years. How long did you work? When did you start working? You started working, well, probably with 20 years of age. 20, 30, 40, 50, 60. This is 45 years, 40, 45 years. Just what I said in the beginning. Well, but if you live to your 100, if you live to your 90s, if you live to your late 80s, well, how is this going to work? How is, of course, the government be able to pay those pensions? And that's really the bad news, that spending the same or even more time in retirement as you did in the workforce just doesn't add up financially. If less money is paid into the pension funds worldwide, well, how can they then pay so many more years? Every decade we stay, of course, above ground, and it seems we add, all the time more years to our life expectancy. I mean, this is great, but of course, unfortunately, pension systems around the world do all face a very common problem, and that is the strain put on existing promises for retirement because of increases in life expectancy. And the gap between that, so that retirement savings gap is so large in some country, and on a global scale, it's actually projected to grow significantly larger by the year 2015. That is an amazing report which just came out from the World Economic Forum in their white paper titled Investing in and for Our Future. And you can see here the United States, of course, Netherlands, UK, Australia, Canada, Japan. You see the life expectancy, past savings, and of course you see here the average savings. So between man and woman. So let's look at the United States. The United States here, you see the age on this hand side, you see a life expectancy. Of course, when they're in between men and women, and the plan, which was the average savings in the pot, but then we see the life expectancy past savings. So when we pass the age of 80, 85, or even in the 90s. Okay, so this is what we're looking, this is what we're facing, and this is what, of course, we sort of had in the average savings, but we are living way longer. I mean, Japan, as you see here, the expectancy is actually living 19.9 years longer than it was actually planned for in the retirement funds. Canada is also good on the way. UK, Netherlands, Germany are all in the same boat. So where is this money coming from? So how much is the projected gap by year 2050? And 2050, okay, we have now almost 2020, so that's 30 years ahead. If you are 40 years of age, that is, you're going to be 70. You probably work till your 70s, but this is going to affect a lot of people, so this is not so far away. And the World Economic Forum actually projects this gap to grow to a 400 trillion by 2050. That's a trillion, obviously, with a T. And a funding shortfall of that magnitude spells trouble with a capital T as well, meaning trouble in depth of trillions of dollars. And this data is sourced by the World Economic Forum, which shows, of course, this disturbing trend in global savings deficit, the number of years between your savings expire before you do, meaning your as I said here, your savings expire before you do. So you live longer, but your savings have all yet long time gone. What are you going to do? What are you going to live from? And this is actually an example from Germany here. I don't know if you understand it, but it means a soup kitchen. Yeah, lots of older people, elderly people, pensioners. Well, they are going to a soup kitchen here where they get every Friday from 3 o'clock on, they're getting free meals and they're standing in lines. So we're looking at, of course, the motor of Europe. Yet this is happening and it is a fact. And of course, it's even worse in some other countries. So the government is really between a rock bottom and a hard place. So you see here on this on the right-hand side, state and local government retirement funds, that's the United States here. You see the total liabilities and the funded proportion. And we see here, of course, the funded share. So you see the liabilities are going up and up and up and up and up. But yet funding, of course, it doesn't go up at the same speed. So you will see the gap is just going wider and wider. And this is 2015. We don't have the latest data yet from 2019. So you can imagine it's only going to go up and up. And for example, for the United States, the employees in US state and local government pension plans have been promised, as in many countries as well, a regular income check for their retirement. The size of the check, of course, depends primarily on a couple of factors. That's the length of the people being in service, meaning working, the workforce, and final average salary. So that, of course, sounds all reasonable, but of course there's a problem, as we say, a problem in Houston, right? There is not enough money in the tin to fund the promised payments at large. And so as this chart, of course, shows here, the funds have around half of the money need to meet actually their obligations. Half of it to meet their obligations. What is this going to mean for you all? Well, in spite of the biggest bull market, which we just have been through really in the US history, the funds on average have not been able to earn a return that is sufficient enough to close the gap between supply. Supply is, of course, the money which is there at hand, and the demand of income that retirees want in their hand. So there's not enough. So all those retirement promises that people do and have given us and have given our parents who are living longer, they are going to be broken. And that affects all Western economies, including Australia, because they're facing absolutely the same issue. In fact, Australia has the highest household debt, but I'm not getting into that. People are outliving their capital, so they live longer as their capital, becoming totally reliant on government funding to meet living expenses and healthcare needs. And governments are between, of course, this rock and this hard place. And the next of course, we had this huge trend, this huge boom, this huge growth in stock market, and the next crash obviously is only just about to come. We already have it in all the news, the global tariffs, the currency wars, and all this stuff happening. So we just saw a recent outbreak of gold. We have a gold trend, bull trend, since of course the last 6 years, we had a huge, of course, stock growing, but of course now we just had a little bit of a smaller minor crash in the stock exchange. So if you are planning your pension fund being, and that's the point we want to make, okay? If you are planning your pension fund being your primary source of retirement income, if you plan to live on that, well, do not expect the future to be anything like the past. It's not going to be like the past, because the numbers don't add up, and therefore something has to change. Things have to change. Living longer than your capital, that you have actually, living longer than you actually have worked, put and paid into the fund, is not longer viable, and people of course need to stay longer in workforce. There's no other ways. They have to be longer in workforce, and you already see this happening there. And you see here on this chart, that is the percentage of the GDP, global domestic, of course, product, discounted by interest rates. So you see the government debt, you see the pension liabilities, Medicare, private debt, other mandatory government, and social security. And the projection is only going up, 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 up in debt. And there's no way that any government will ever get rid, of course, of the age pension. So they're going to have a pension safety net. But the problem is, what is it actually going to cover? How much is it going to go and actually pay you? Can you actually live from that? And obviously, probably not. So, however, of course, what governments are going to do, what they already started trying to do, is to make changes to eligibility, accessibility, and payment levels. So increasing, or really starting with that, the pension age to 70 years plus, include the family home and asset test calculation. So you see already the study here from Japan, that Japanese people already starting to work longer. Okay, and also in Europe, people are encouraged to live longer, but then where are the jobs coming from? If the jobs are actually diminishing, if AI, artificial intelligence, robotic labor is actually taking jobs away, whole industries are dying, we are gonna work those people. What are they gonna do? So again, look at how do you actually gonna make up this income shortfall? What are you gonna do? And you see here, this picture speaks for itself. Elderly people, doing jobs which they probably didn't even study for, and that is a reality. So having to work till very, very long age. So what are you going to do? Are you going to go back to part-time work? You have a part age pension. What you're going to do? So when we look at the average lifespan, of course, in those many developed countries, which is now 80 years plus, how much would it actually cost you to survive the extra 10 or more years, which is 520 weeks? How much will it cost you to survive the extra 10 years, 520 weeks? How much? Have you ever thought about that? What it's going to cost you? Let's say you would need, for a sort of good standard of living, $500 a week. I mean, we have a lot of people here who earn US dollars, of course, Australian dollars, British pound. But let's look at the dollar, $500 a week. It's around 400 euros, or 400, maybe a little bit more. Maybe I'm out of my numbers, maybe 420, 430. And anyway, $500 a week. You will have, if for 10 years, you will, of course, need $260,000. But let's say if you need $1,000 a week, so $4,000 a month, you would need an extra $520,000 for 10 years. So we are talking about 10 years longer living. Yeah, we're just talking about 10 years longer living. Yes. So we learned before that our pension plans all over the world, the expected, what they calculated on was that we are living in our 70s. Yes, maybe in some cases up to our 80s. Well, we learned we are actually living longer now. That's the statistics. We are living longer. We are living well beyond our 80s. So that means 10 years more of living at the time now. Now, of course, Japan is already embracing 100 years long living. Yes. So we paid 40 years in our pension funds, maybe 45 years in some cases. That's what we paid in. But of course, there's only so much money into the fund system, into the pension system. So living an extra 10 years, maybe in some cases 20 years, well, another 10 years just by living on $500 a week. And again, we've got to also look at inflation. That is, if prices would stay as they would stay right now. Are they going to stay like this? Well, of course not. Do you pay more for your goods and services this year than you paid last, or 2 years ago, or 5 years ago? Of course, you pay more, right? You pay more for your milk, pay more for your bread and butter. You pay more for your gas. You pay more for your internet service. You pay more, right? So if you live on a $500, if you need a $500 a week, that's $2,000 of course month. That is what, $1,800, $1,700 euros here where I live. And I know that that is not what even my mother gets. She's actually getting already, in fact, less than that. So it's already struggling to live. But this is just an estimation. What would it take you? What money would it actually take you in the bank? Let's look at this. So in order to make an extra $500, that's an extra $500. Okay, we're looking at an extra $500. Well, you see here, and that is a monthly income generated at a 5% return. 5% return. Now you probably look at me, which bank is going to give you a 5% return? No, right? But anyway, so the examples make on a 5% return. So let's say in order to make a $50 monthly income, well, you need to have $12,000 in the bank. $12,000 in the bank in order to make $50 at a 5%. Now we know most banks, they pay maybe 1%, right? Maybe a half of a percent, maybe 1.5%. But let's look at the number 500, which is really between here, $625 or a little bit less. So you need an average of $150,000 in order to make around $625. That's what you need in the bank. Now, ask yourself the question, do your friends and family, do they have $150,000 sitting in the bank? And then, of course, it is on a 5% return. Well, most people would say, no, they don't. They may have a house and they think that house is an asset, yet this is a liability because they have to pay for it. So that is, unfortunately, the shocking truth. $500 extra a week we were talking about, you would need that. But if you really looking at a $500, at a $2,000 a month, well, you need to have, of course, 4 times more here in your bank deposit to term deposit. In the US, as you see here, this example is a 1%. There we go more into the realistic numbers now. I mean, if you want to have $5,000 and if it's $5,000, it's not a great deal to live on. It's not a great deal to live on a $5,000. I mean, you know, you can live on it, you can live okay, but don't think you go to Bermudas and Bahamas and whatever all those vacation you want to do in your golden years. Well, you need $6 million at a 1% bank term deposit in your bank. $6 million. And again, this is a fact, and unfortunately, so many people don't look at those facts. And so we're living, of course, in a stark financial and environment reality. That is, well, our dollar, our euro, our British pound, all the currency against precious metals. Of course, they are losing its purchasing power. Do we, again, I said before, do we pay more for our goods and services every year, or do we pay less? We pay more, right? And of course, we also have, and that's really moving into the presentation, what we have here with Utopianglobal, we also see a huge environmental challenge. So you see, of course, all these plastics swimming around and everywhere. So what we have an imbalanced global financial system. We have a crippling wealth concentration. We see a declining in global currency and purchasing power, and we have a rising government debt, as I just demonstrated you. And we have also a high global resource consumption. Yes, so everybody is now, I was just talking about the other day with some folks, electric cars, electric bicycles. I just bought my mother one. So all this electric go moving into alternative energy. Well, what are these electric bicycles and these electric cars? What do they run on? Energy, right? You need to plug them into something, which is energy. Now we talk all the day long about alternative energies, resources, etc. They also need minerals, because all those batteries of course, they're composed by different minerals, very important minerals, which of course are getting scarcity. So we see all those things happening in the world. Your pension not anymore being secured, or not anymore being able to pay what you thought of you could live on. We see an environmental damage. We see so many things currently going on. So what if you could actually countercrim those financial realities, address the environmental damage and the energy crisis, while also boosting your income? What if? And this is what we have here with Utopian Global, for the Utopian Global ecosystem. We have real assets. We have gold or silver, precious metals, which is the best hedge against inflation. And we have been doing so since 2008, helping people to convert their dollars, their yen, their euro, whatever currency, into gold or silver. Why gold or silver? Again, because it maintains the purchasing power over time, meaning the same goods and services, if you held gold or silver, would still buy you the same, yet with dollars, euros, not, you need always more. So we have real assets when we also have real income. And that is, of course, how we have a better way to counter today's financial pressures and environmental crisis, and helping you grow your income, securing your income, securing your assets, and of course, therefore, face the future with confidence, what we all look for, a better lifestyle, our golden lives, to be able to spend our golden lives without all those difficulties and headaches ahead. And so the Utopian Global ecosystem provides you with a unique system to earn and accumulate income producing energy assets via Store. Store is a token backed by real assets. I'm going to talk about it in a second. Safeguarding your wealth by owning precious metals and growing your reach and boost your income when you market our products and services, building or helping you build a business if you wish and like. And of course, therefore benefit from proven wealth strategies and business ownership. So Store, the product store, the token store, which of course we do heavily promote through the Utopian Global Network, is basically investing in resources that power the world. You just learned you need more energy. We all need energy. Even though if we go from now moving our traditional way of course, tanking our car, now going to electricity. We still need energy. We need, in fact, more, because our population is growing. And a Store stands for Sustainable Technology and Resource Holdings, and invests exactly in that. In energy resource projects, do we need more energy? Yes, we need. Infrastructure and service-based projects, mineral development and technology projects. I just talked about it. All those electric cars, all those electric motors, what do they run on? They run on energy. What are they composed of? They're composed of different minerals. Rare minerals, actually. And so Store is a token. It's has been launched 7 months ago now, and we have been able, with Store and through Store and through the Utopian Global Network, to raise funds in order to have purchased now a Texas oil producing field. Why? Well, because that Texas oil producing field has currently 90 plus active well, currently drilling, we just announced that, and produces currently 800 barrels of oil per day. Do you think oil is money? I believe so it is. Do you think it's going to be money in the next 10 or 20 years? I believe so it is. Do you think it's going to go disappearing in the next 10, 20, 30 years? I don't think so, because yet most of it is still depending on, of course, oil. So, and this field has a productivity lifespan, meaning there's oil in the ground for 25 plus years, and currently constantly redeveloping and finding new wells at this particular field. It's already in operation since the 1930s. Absolutely amazing. And of course, thanks to all our work, your work, all the people who are sharing this amazing concept, we have been able to raise the funds to buy 12% of that Texas oil producing field, which has a currently internal rate of revenue of 25% and a potential, if we do reinvest, which we just actually have been doing, to increase this internal rate of revenue to 40%. Now, what does this mean? Well, 25 plus years productivity life. If you own store, 25 plus year productivity life. That means 25 years production. That means 25 years plus income. Why? Well, because we need 10, 20, 25 and more years still oil. So meaning oil is money. Therefore, this is an amazing project, which is going to pay you for a long, long time from the production of these assets. And when you buy into store through Utopianglobal network, you actually buy or own real assets. You have actually stakeholder ownership in owning real assets, meaning you are part owner of that assets, which is really great. Plastics. I think we all know that there is a plastic crisis, isn't there? We go swimming anywhere, and it doesn't matter which ocean, we see plastics on the streets. So everywhere there's a real problem of plastics. I believe Australia just announced that China is not taking their plastic anymore. What are they going to do? So the project which we have in store is polystream plastic to fuel processing, meaning building a facility which actually can turn that plastic into oil. Do we know and agree that oil is money? We do. So imagine we can turn plastic into oil. Currently, there's around 7 to 10% of plastic recyclable. That's currently the phase. And there are existing, of course, polystream plants. But technology is advancing, like anything. Technology is enhancing. And of course, with the team of experts we have in store, well, this is what we do right now, is raising funds in order to build our first polystream plastic to fuel processing plant. We have the plan to build 100 of them all over the world, especially focusing in the US, Central and South America. One of those sites, one of those plants, of course, can turn 20 to 45 kilogram over on a daily basis. And of course, the break even on these plants is 2 to 3 years, and has, of course, a huge socio-environment impact. But the money generated through that is absolutely amazing. Absolutely amazing. So we are helping the environment at the same time making great money from it. Then, of course, I just talked about all those new electric cars. Will all need what? All need minerals. They all need minerals. The phone I'm talking to here has minerals in it, hasn't it? There hasn't been yet a way discovered how to displace those minerals. We need them, especially, of course, for electric cars or electric bicycles. We need lithium. Yes, so it's a very rare, mineral. So what we do have, and that's the next phase in the growth plan of this amazing project, is the Ecuador and Peruvian project, mineral recovery and land reclamation. Now we know, naturally, everything which has to do with mining, mineral mining, is risky, it's dirty, and it's bad for the environment. But yet again, because the store and Utopianglobal, we're all about environment. Very important to us. Very important to us. And we're working together with Robert Anthony Slaughter, which you see here, this person over here, and in this picture over here. He's has decades and decades of experience in mining, and he has a new technology, the Australian technology. We know, of course, Australia is always on the forefront of new discoveries, new technologies, especially when it comes to environmental issues. So there's new technologies which help to, on one hand side, take the minerals out of that land, but also then clean it up, meaning that not anymore those this environment is polluted by those different chemicals they use in order to extract those different minerals out of those mines. And so when you look at the Peruvian project, and we look at the Ecuadorian project that has from 1 up to 7 million ounces of gold. How much is gold today? I believe 1,500, something like that. 1 to 7 million ounces of gold makes straight away the company, if we work on this project, to $1 billion company. But the Peruvian project here as well has 7.4 million tons of copper, 40,000 ounces of gold, 1.4 million ounces of silver of reserves in there, which is an upside to 2 billion. What does it mean or translate to you? That means once we raise the funds to be able to develop those sites, of course, a huge upside, a huge upside. Why? Well, because that puts the token, the company, of course, to a totally different scale. And that means your token will be worth more in value, as you see here on this next slide. So we started out with the store project at the token price as a gross retail package price, 25 euro cents. And we are now at 1 euro cents at a gross retail package price. Why? Well, obviously because we could raise enough funds so that we could acquire the taxed project. So that is now under our belt. And even we have reinvested in this month starting to drill new wells, and soon there will be a report how successful this was, because this is also going to enhance the price and therefore eventually again rise the token price. Why? Well, because the company value goes up. When a company value goes up, obviously the share or the token price is going to go up. It's a no-brainer. But of course, we, as you just saw, we want to go further and further and further and raise more capital so that we can build out all these projects which you just saw here. So if you raise more capital, well, obviously the company will have more value, your token will be having more value. So for you as a person looking into something, looking into having an alternative, doing something about their pension, which is coming up in 10, 20, 30 years, to having a reliable source, a reliable, stable source of income. And so there's, of course, different ways how to create liquidity, meaning in one hand side, and this is what we strive for, to very soon be able to pay distributions, meaning from the production of the assets, pay the distributions. And then, of course, the target is eventually to launch it on an exchange. So if you want to cash in, sell out, you can do so by selling, of course, your token, your shares on one hand side on an exchange. And as you see here, the initial target we're looking at is a 4 euro target, eventually even moving it up to 10 euros. And that is all based on the acquisition of those different projects. So in order of the acquisition of these assets, the company price and token price is going up, which of course makes sense. So it's not just a price which is invented because we think, we speculate, we want to go there. It is actually what the asset value will be costing on the market if you were to sell them on the market. So of course then there's a different and this is of course a disclaimer here, we never know how much it's going to be and once we launch an exchange, which is clear, or store doesn't know that, because it also depends on supply demand. So what is actually the buyer willing to pay? But those are of course statistics, those are numbers based on the asset value of the assets which store is acquiring. So let's look at a different angle here, what do we have at Utopianglobal in a nutshell again? Well, we have a ecosystem where we have gold or silver, which comes from Argo Riot, and we have store. You can get in as a customer, pretty simple, just purchase your store, and then, of course, wait on the returns of those distributions, or speculate on the upside when you want to sell. And, of course, you diversify your money, your currency, your dollar, your euro, your British pound. You diversify it for gold or silver, because gold or silver always maintains the same purchasing power. That's a passive associate. You come in as a customer. Or an active associate. An active associate, distributor, however you want to call it, marketer. Well, you're also going to get access to the platform, meaning you can actually do the marketing for Utopianglobal, and of course bringing customers, bring people who want to, of course, purchase our products and services, and you're going to get paid through making the marketing for the company. So the company didn't decide to pay a huge marketing agency all the money so that they market and promote. No, the company decided to pay all ordinary people in order to make marketing, and have therefore developed a marketing plan that you can actually get paid through, of course, the sharing of our products and services. So you can purchase literally your gold from as little as 25 euros. Your store you can buy from as little as 50 euros. You can get started. There's of course no limitations to what you want to put in. And as a associate or affiliate member, the smallest package to enter is 99 euros. Then you have a 50 euro monthly wealth accumulation plan. So in order to maintain your business, because you're then owning a business, it costs you 50 euro monthly. In this 50 euro, you're going to get store tokens, or if you're in the United States, you get actually silver each and every month. On the store, there is 3 ways to earn actually with store. That is the token appreciation, which I told you about once we go to exchange, the quarterly distributions, which pay, of course, from the earnings of these assets, and then, of course, through referral to other people. So if you look at referring to other people, you see here we have different packages. Packages range start from 99 euros up to 1 million euros. Obviously, as more money you put in upfront, well, as more store tokens you will get, as it will drive the store price token down. So if you calculate for a 9,000 euro package, you get actually 18,750 store tokens. That means the store token is not anymore 1 euro. It's less than 50 cents, isn't it? If you, of course, calculate. But of course, if you buy in at a 99 euro, it gives you, of course, the flexibility. You own a platform, you own a business, but you get less tokens, which of course drives the token price up higher, which is clear. But still looking at the potential earners, and that's the potential earnings, of course. Again, disclaimer here, during the pre-sale, which we are, the pre-sale period of store, not all the capital that is received is allocated to store, because we pay out, of course, for the marketing. Utopianglobal is obliged to pay commissions to the affiliates who partake in the marketing of store. Only when store has been listed on exchange will the fully purchased value be realized, and before listing, distributions will only be paid on the net price of the token and not the gross price of the token. Okay, so what net went into store, this is what you're going to get paid on, not on the gross price of a store, which of course makes sense, because on the gross price is also what is going to be paid for marketing. So you see here an estimated listing price of 4 euros. So if we were to list at 4 euros, and you purchase now your 99 euro, you would get 68 tokens. That, of course, in a listing price would bring your token price to 272 euros. That means your estimated earnings would actually be at 275%, wouldn't it? If you were to realize, if you were to sell at a 4 euro. And as you see here, as more or higher the package you enter with, obviously as more the percentage. Makes sense, it's clear. But when you look at the 50 euro monthly plan, let's say you were to do a 50 euro monthly plan, you're accumulating you dollar cost averaging really, so you're accumulating more and more store tokens, you're owning more assets. More assets mean, of course, more money. But when you share that with others, so you share that 50 euro plan with others, you share this amazing product with others, you're actually going to get paid. Meaning, when you share this package with others, let's say somebody buys a 50 euro package, well, you're making some commissions. You're making 14% commissions. 14% commissions on 50 euro, 7 euros. Doesn't sound a great deal, but if you have a lot of people buying just a 50 euro, accumulating month by month by month more assets, well, you know, it is going to zoom up. So you see the different packages here, the earnings you would make actually if you refer somebody. Let's say you refer somebody with a 1,500 package. If you refer somebody with a 1,500 package, you're making a 500 euros. Now, 500 euros doesn't sound so bad, right? And it's one person you referred. What about you refer 3 people with a 1,500 euro package? Well, 3 people, that's 1,500 euros you make by referring 3 people. 1,500 euro, which of course is already a great extra income. If you were to do that each and every month, well, there you go. There you go, and there you're already making a really great deal, of course, of income. So let's look at what if you would share it with 5 people. You would focus on sharing it with 5 people, and you would help those 5 people do exactly the same you do, sharing it with 5 people. You share it with 5 people. Do you think that information is valuable? Do you think people would grasp this, that they really have to do something because we do live longer? No matter which, where, we all living longer. It's a statistic, it's a fact. What has been happening the last years, and it's going to just increase. Yet we are not working enough or long enough in order to pay for this pension funds. So imagine just sharing with 5 people. Well, 5 people on a 50 euro plan, that's only a 50 euro plan, wealth accumulation plan, you're making 35 euros from. You know, again, it doesn't sound a great deal, but it is great because you're accumulating more store tokens, they're accumulating 5 people. That's it. Now, of course, if you share it with 5 people, they all buy a 1,500 euro package. Now we're talking. Now you're making great money. But what if, and that is what we want to here teach you, what if those 5 people you shared it with, they all have 5 people they could share this information with. And so you building an organization of people just by merely recommending sending people to this presentation. So your bonus, you accumulate bonus could actually, if everybody would show it to 5 people, would show it to 5 people, would show it to 5 people, could be based on the 50 euro monthly plan, not based on the 1,500, not based on the 3,500, not based on the 399 or the 90, based on the 50 euro, would actually look like your grand total of 244,000 euro. That is on a monthly basis. Now, of course, that is a huge sum. Now we know not everybody is going to share it. Some people are not going to share it. Some people share it with 1 person, some people with 2, some people with 3. That is based only purely on the numbers if 5 people would share it with 5 people. And again, why did the company do that? Well, the company could just easily say, okay, we're paying 1 marketing agency, they're doing everything for us, we're paying them big dollars. But Bill Rowell, the company founder, didn't want to do that. He wanted to help ordinary people make extraordinary income. But what about having your 50 euros paid for? Well, that is also possible. If you have 7 people in your direct or indirect line, meaning in your first or in your second level, if you have 7 people who are buying their 50 euro monthly, your wealth accumulation plan of 50 euros already paid for. So you're actually earning 49 euros. So you just have to chip in 1 euro out of your pocket, but it's already paid for. So meaning you're accumulating for free, literally, if you're in the United States, you're silver, or in the rest of the world, your store token, your assets, which are going to produce you real income. So the company is headed up by Bill Rao. He's not on the call today. He's actually on an airplane, I believe, to Dubai right now, and from Australia, so it's a long flight. He has been a successful entrepreneur since over 30 years. So you buying into this expertise of knowledge. Founded, of course, a highly successful precious metals companies, 15 years energy resource investment. He himself has put $1 million plus with the owner of Store in back then on their energy fund they had back in the old times. This was not Store. He, of course, has shipped into Store as well. But so you see, it's a long-term relationship. You buy in this expertise and also has expertise in virtual digital currency, cloud-based blockchain mining. Ryan Messer, he heads up Store with his partner Randall Eddington and a huge team of experts. He has very extensive energy sector and entrepreneurial experience, drilled over 200 wells inside the United States and outside. He is owner of 2 companies currently. Besides Store, co-founded and run operations for Sterling Energy, is managing partner Chatter Equity Partners, BlackRock Midstream, and Source Rock Exploration. When you start to build your business with us, there's multiple ways to earn, obviously. So one hand side, you invest in Utopianglobal ecosystem product and services. You commit to the €50 wealth monthly accumulation plan. Now you can stop it at any time. There's no you have to. You can stop it at any time. If you don't want to, you can stop it, you can sell it, whatever you want to do. And you can earn quarterly rewards, obviously, from the profits generated by the assets owned by Store once distributions are made past acquisition phase. Store just announced just a few weeks ago now that they have completed the acquisition of the Texas asset. And now they have already announced they have reinvested money in order to drill more wells. So we are well on the way. So your next step basically now is to just begin your journey to generational wealth. Choose your step, one step, some step, maybe all steps. Enroll in the Utopianglobal NASDAQ purchasing plan, gold or silver, from as little as €25 a month. I encourage everybody to do so. Why? Well, because every 8 years, we need double the money than we need now. Why? Because obviously the US dollar, the euro, any currency is losing value, meaning you need more of this paper money just in order to buy the same goods and services. Again, just think about, do you need more money today to buy or to pay for your bread than 5 years ago? You do. Are you paying more for your coffee today than 5 years ago? You do. So it's pretty simple. Against gold, gold has always maintained the same purchasing power. So we all need gold or silver. Why? Because it is the hedge against inflation. From as little as 25 euros a month, you can literally, do that. Get into the habit of savings, building your NASDAQ. From as little as €50 monthly, you can actually start your Store wealth accumulation plan, or you become a Utopianglobal business owner and earn lucrative rewards, as you saw before, as I demonstrated before, to you, the amount of money you can actually make when you build and share the message and you build a team. Absolutely great. And with that, I want to say thank you. I hope that you learned something in this presentation. I expect that you do make action. I expect that you will take this serious, you will not take this lightly, this information, and you will start your, of course, plan towards your retirement. Because again, we all do age, do we want it or not? And, as we age, I can only tell you something, if we have money, that's just letting us sleep a little bit better. So it's just a fact. So, we all age, but isn't it better aging, having money, than aging, not having money? So thank you so much, folks. And I believe on next Tuesday presentation, we're going to have again our founder and CEO on board as he is back in Europe. So thank you guys, and all have a great, wonderful weekend, and looking forward to some more great presentations. Next week, it's all going to be about the environment changes, about new and renewable technology, electric cars, why we do need more minerals, and we're going to talk all about that. So stay tuned and come on our next presentation next Tuesday. It will be a very interesting discussion. So thank you so much, folks, and have a wonderful weekend.